Good evening. This is Ken Long from Tortoise Capital Management with the Daily Market Health Check for April 14th, 2010. You can see that we've moved from bull normal into bull quiet conditions. The ADX of the market is approaching 30, which is a very strong upward trend with green better than red. You'll notice that the last crossover, green crossed over red, the plus DI crossed over the minus DI on or about March 1st. When ADX was still declining and then only slowly started moving up. That crossover is significant because it gives an indication that the trend has changed, and you can see how on that day we were at the start of a positive bullish move. Some other observations on the chart. You can see the very tight range of the 30-day regression channel outlined by these three black lines. The center black line is the 30-day regression line. That slope is very positive, and today was a favorable move up, testing the upper limits of the channel. Vertical blue line is the 10-day marker, and you can see that we are still on a 10-day basis very overbought. It's been overbought for a long period of time, so that's not a reason to sell. It's just a reason to recognize how strong the market has been. On an annual basis, Williams percent R has been overbought for a long period of time. Price is well above the 20, the 50, and the 200-day moving average. I showed the 200-day moving average as the edge of this blue shaded area, so we get a sense of where the sideways market would begin. Is down around 108. Everything looks favorable on the long-term charts. Shifting over now to the daily summary report for the 14th. As you can see, we're in bull quiet, overbought on an annual and a 10-day. On a 10-day max pain, we have some old reliable targets here. Verizon, Alcoa, Merck, Travelers, and Bank of America look favorable. Williams percent R, as you can see, still well overbought. No signals on the overreaction or the channeling system. The pivot point for SPY almost at 121. You can see on the volatility for the market, we've been hovering around this red line. That's the boundary for quiet conditions, one standard deviation below average of the last 180 days. On the summary of market indicators, the weekly RSI is above 70. That's a rare condition. It indicates overbought. It can stay overbought for a long time. Just this tells us that this has been an extraordinary move on a historical basis. The percent stretch above the 200-day moving average is 13%, which is bullish. The yellow indicators shows that there's still room for it to stretch, to keep going based on historical norms. The 5-day slope of the 50-day moving average at 1% is green. That's very bullish. That's a really strong indicator of the shorter-term trend. And our volatility index at 11 puts us into bull quiet. Among the daily short-term setups, there's a number of energy sector ETFs that are in continuation patterns on the 5-day down on the long side. XLV on the upside, and then some of the usual suspects, some favorites on the 551W screen, and that's again positive on 5-week, but it's below the 5-day high, and it's had at least one day of positive momentum with 2-to-1 reward to risk on the upside if it just simply tests that 5-day high. So those are all short-term targets that we're interested in. In the triple screen, Verizon is attractive. The stealth candidates in the Qs and retail remain strong. And among ETFs, pharmaceuticals and consumer staples still look good. On our daily tactical, you can see the Dow 30 on the left, and then all the usual suspects on the large ETF indexes on the right. All these greens on the 10-day and 52-week index just indicate they're all very well overbought. Looking at the 10-day index rating on the Dow 30, that's similar to the Williams percent R. In the yellow, you see the ones that are less than 20, and that means they're oversold. All the ones in the green are well overbought at 80 or better, and that tells you where the strength and the weakness has been relatively. The symbols that are coded green on both of these tables are ones that were percent leaders on today's gains. You can see oil, so I'm looking for that to be a continuation play tomorrow in USO. Asia less Japan will be on my short list, as are the small caps IWM. You can also play that with UWM and buy strength tomorrow. That's the double leveraged Russell 2000, one of my favorite stalking and trading targets. Among the Dow 30, we saw strength today in JP Morgan, Intel, American Express, and Bank of America. You can see again old favorites Verizon and Merck were percent losers today. They have room to catch up on a reversal pattern. Their first day of momentum could be exceptional. So that's a quick look at the daily market health check and a few tactical trading targets. This is Ken Long. Keep your risk measured and your rewards in sight. Thanks.